Good morning from Davos. A jam-packed hour of interviews with some of the biggest business leaders in the world is straight ahead.
This hour, we're joined by the CEOs of PayPal, Kaiser Permanente, JP Morgan, and Uber.
And we'll wrap up a big morning of earnings from Dow Components, United Technologies, and Procter & Gamble, as well as media giant and CNBC parent Comcast. The final hour of Squawk Box begins right now.
This is a special presentation of Squawk Box, live from the World Economic Forum in Davos, Switzerland.
Good morning and welcome back to Squawk Box here on CNBC. We are live from the World Economic Forum in Davos. It's like 2 o'clock, which is weird for Squawk Box because it feels like it should be 8 o'clock. Is that what
it is 8 o'clock back home.
It's the math is hard. The calculator here. I'll get back to you. I'm Joe Kernan, along with Becky Quick and Andrew Ross Sorkin. Strong earnings from Dow Components are what's happening this morning. With that, as you can see, the Dow futures sharply higher, including Procter & Gamble, Technologies, IBM last night. All these boosting the futures right now, 185 on the Dow, the S&P up 12. The NASDAQ indicated up 33. That's, on a relative basis, pretty strong this morning.
All right, let's give you some details on some of those Dow stocks that are on the move this morning, starting with Dow Component Procter & Gamble. It came out with earnings that were better than the street was expecting in the latest quarterly earnings report. The consumer products giant earning an adjusted $125 a share, with revenue topping what the street was expecting as well. Those results were helped in part by strong demand for Procter & Gamble's beauty business, and you can see that that stock is up by 4.2% this morning. Then there's Dow Component United Technology also beating the street forecast. The industrial products maker reporting adjusted quarterly profit of $1.95 a share. That is well above the consensus of $1.53 a share. Revenue also beating estimates, and those results helped by the company's November acquisition of defense contractor Rockwell Collins. And you can check out that stock, UTX, up by 3.4%. Also, media company and CNBC parent company Comcast beating estimates in the latest quarter. Comcast earning an adjusted 64 cents a share. That was topping the street's expectations by 2 cents. Also, revenue beating what the street was expecting. And Comcast also increasing its dividend by 10%. It beat on most of the metrics that were out there, and that stock is right now up by 3.5%.
Okay, let's talk about PayPal. Due to report earnings next week that are expected to be better than a year ago period, payment company's been on a big drive to gain more of the highly competitive digital payment industry and has been unafraid to tackle controversy along the way. Joining us right now is Dan Schulman. He is the CEO of PayPal, and we have a lot to talk to him about. I want to start with the government shutdown because you took steps, I believe, just last Friday with a new program called PayPal Helps to help government workers who are not being paid.
Yeah, that's correct. First of all, Andrew, thanks for having me. Becky, Joe as well.
Great to see you, Dan.
Always good to be here. Yeah, we did. Last week, we decided that we had both the opportunity and I think really the responsibility to step up. As the private sector, we put aside $25 million into a fund so that we could loan up to $500, which is the average take-home pay of a federal worker, in a totally interest-free cash advance. And so it's our part to try and be part of our communities. These workers, as you all know, are living paycheck to paycheck, and they really need our help.
If this shutdown continues, is this something that you would even consider expanding?
Possibly. I mean, I think it's really important that we as CEOs really think about our companies as part of the communities that we live in. I think doing these kinds of things, and a lot of people think about purpose and profit as being in different camps. I think that's a false duality. I think you do the right thing and those things come back multiple-fold to you. I think it's the right thing to do for business, and I think those things, when we are part of our community becomes part of us as well over the long run.
And by the way, what is your expectation for the government shutdown in terms of just business broadly? Are you seeing less people use the payment network or the payment system?
The shutdown's been going on now.
Government workers actually spending less money?
Yeah, the shutdown's been going on for a month now. And those workers, as I mentioned, count on the income from those paychecks. And they are hurting right now. They're having a hard time buying groceries. They're rationing medication. And so, of course, their spending is down as a result of that. From a PayPal perspective, we have a lot of tailwinds at our back. We live in the digital economy. Things are digitizing. Retail is moving towards digital. Mobile's exploding. And so, our business remains strong.
We've talked a lot about the trade war with China, and wanted to get your sense in terms of your ability to do business in China long term. Obviously, WeChat has a huge presence there, so that's just a big competitive challenge, but also the larger overhang of the U.S.-China relationship.
Yeah. Well, my guess on that is that resolves itself in some way. I mean, I think both for China and the U.S., it makes sense for there to be an agreement. Both major economies, we're both major trading partners. It makes sense for that to happen. We'll see how that winds up. But for us, China's a very important part of our business. We don't have a domestic payments license, so we don't operate inside of China. But we're a very important platform for exports, online exports coming out of China. So we take our 250 million people on our platform, AliExpress and other players inside China, put the PayPal button on their merchants, and our consumers outside of China purchase from Chinese merchants, and they export goods out. So it's a big business for us, a growing business for us, and one that isn't affected by these trade
Hey, Dan, let me ask you about cybersecurity, because it seems to be a huge topic here. Yeah. So many boards of directors asking about it, so many CEOs asking about it. And you're somebody who's been talking about it for so long. You scare me to death every time we talk to you because of how many attacks are coming into your system every day. My question is, are these companies just becoming woke to an issue that's been out there for forever, or are the attacks really getting worse, harder to track, harder to find, targeting more companies? What do you think?
Cyber's been an issue for quite some time. As more of the world digitizes, as more of everything we use involves software of some kind, elevators we go on, the dams that protect our,
thank you once again.
Every single bit of our life revolves around software, and as that's increased, so have the attack vectors for cyber. But I think for companies like PayPal, for financial services company, they've been woke for quite some time around this. We realize that identities typically are compromised, so that we do many things beyond username and password. That to us is jacks are better in this poker game. You have to look at 30 or 40 different variables on almost every transaction to be sure that the transaction is valid and it really is you who's coming in. And we're able to do that now with mobile devices.
How many attacks, again, do you get on a daily basis?
So in general, the average American business gets attacked hundreds of times, but financial institutions get attacked over 1 billion times a year.
Wanted to get your thoughts on a completely separate issue. In the last 48 hours, I think you probably saw the news. Elliott Management took a stake in eBay, which used to be the other half of you. You still a huge part of your business, eBay, effectively as a client. Long term, do you think eBay remains an independent company with an activist in there who historically has ultimately pushed these companies into other hands?
Yeah. It's hard for me to comment exactly on that letter and that note. eBay is about 10% of our overall volume right now, so much smaller than what most people imagine. When we split off, there was something like 30 or 40% of our volume, and now they're much, much, much smaller. Listen, we're big strategic partners of eBay. We work closely with them, and we wish them, the best of success, because I hope that they are very successful going forward, and we'll see where that winds up.
Okay, we got to run, but it's a topic we never talk about this whole time. Bitcoin. What do you think? Prices dropped materially past year.
Listen, I have always thought that crypto was more of a reward mechanism for implementing blockchain, as opposed to really a currency. And we're not seeing many retailers at all accept any of the cryptocurrencies. But I think the underlying technology is still very interesting.
Alcohol or pot for you, Dan? What do you? What do you like?
I turn to you first and get your opinion.
I don't see why it has to be one or the other. Right, Andrew?
PayPal or Bitcoin? What are you trying to say?
Pot or alcohol. Anyway,
cheers.
That was you missed it.
Cheers to you, Joe.
Yeah, dilly dilly. Anyway.
Dan Schulman,
Thank you.
CEO of PayPal.
Some big guests coming up on Squawk on the Street at the top of the hour. Sarah Eisen joins us now with more. Sarah.
Hi, Joe, Andrew, and Becky. Yes, excited for the next few hours here. We're going to talk to early Facebook investor, noted venture capitalist Jim Breyer at the top of the hour. We're going to play you some highlights from my conversation with Goldman Sachs CEO David Solomon and IMF Managing Director Christine Lagarde, going deep on gender equality and where the biggest opportunities are in finance and where this industry is when it comes to hiring and promoting women. Hot topic of discussion here in Davos. And guys, I know you talked about P&G earnings just out with a beat, stock on the move higher. We're going to talk exclusively to the CEO, David Taylor. That's coming tomorrow. The P&G earnings sort of pretty much sum up, I think, what we've been hearing from some of these big guests, and that is maybe a slowdown in growth, but not an all-out recession, and still plenty of signs of growth in pockets around the world. So we'll definitely get into those themes as well, as you have. Becky.
Okay, thanks, Sarah. When we come back, JP Morgan CEO Jamie Dimon will join us to talk banking, regulation, and the state of the U.S. economy as the longest government shutdown in history hits 33 days. Stay tuned. You are watching Squawk Box right here on CNBC.
I just wonder if you think that the more we hear about Coast Guard people not putting food on the table, I mean, it's incumbent upon someone to move off the dime or the snide or whatever.
Well, I heard David Rubenstein on your show saying that,
right.
And he probably spoke to someone who may know.
And McConnell has two competing plans.
The Democrats and Republicans should sit down and finish this issue immediately and compromise to do it. That's what they should do.
All right.
Jamie, you talk about leadership styles all the time. What's it going to take? I mean, these are our supposed leaders in Washington, both sides of the aisle. The idea that they've let this go on for 33 days?
Yeah, I don't know. You know, I thought the president actually moved a little bit. Well, he spoke about $5.7 billion. Part of that was, I think, like $1.5 billion was things that Democrats wanted. Everyone wants the DACA to stay. You know, you can argue 3 years permanently, but, you know, to me, there's the makings of a deal, and they should make a deal because it's going to get worse for the American public, and they shouldn't allow it. And it could damage, you know, it's damaging comps a little bit. You see consumer business comps is skyrocketing. Now it's coming down a little bit because of that, because of trade, all the noise around the world about populism. And so, you know, if policymakers want the economy to grow, they better keep
What kind
their eye
of
on the
impacts
ball.
is it happening? Is it having on the bank? And the reason I ask is we've had a lot of conversations, including with Adita Freeman and other. We're going to see Derek Khosrowshahi, who's supposed to maybe pursue an IPO in 2019. Right. Everybody's pens, as far as I understand, are down right now, which means that bankers, lawyers, accountants, anybody who would be doing that kind of business is at least temporarily not doing it.
Yeah. So another example. So IPOs can't get done. Anything that's got to get signed off by the SEC basically can't get done. So the backlog will continue to grow. People waiting. People not getting comments on their 10K. All these things, but they're just not good. This is not the way to run around. And somehow our government should figure out a way simply never to do it again.
Are we at neutral? Fed funds? Are we at neutral?
I don't know. Can I just give you a quick assessment? Because I think he's all the noise out there. The U.S. economy is kind of like a ship that's going. It's growing. The shutdown 2 to 2.5%, and that's going to keep on going for a while. Then you have all this other noise. Okay, geopolitical noise, Brexit noise. What's the Fed fund? What's the Fed going to do? I'll talk about that in a second. Shutdown, trade, and those they're kind of like boiling the waters in front of that ship. So eventually, that may very well cause a slowdown or a recession. And I don't know if it's 2020 or 2021, but the range of possibilities is broader, and the range of bad outcomes is increasing.
Yeah, but if something really good happens, you get a tailwind. If we did something, so then it's not 2 to 2.5. Then we're back to maybe 3.
It's possible. And I think the Fed will look at what's going on. I mean, my guess is they'll probably pause now. But if they raise rates again in 6 months or so because we're growing at 2.5%, that's still a good thing.
Let me ask you.
I always tell the what is much more important. The why is much more important than the what.
But that's if the Fed reads the economy right. That's the big question. That's where people have
my guess is with all of the stuff that's going on today, they're going to wait a little bit.
But Jamie,
if you have growth of 2% in the first quarter, adjusted for the shutdown, then maybe 2.5% in the second quarter, that is a good thing. And even the IMF report, it was reported very negative. They reduced their global growth forecast from 3.7 to 3.5. Most of the negative coming out of Europe.
But Jamie, in terms of GDP U.S., you're one of the few CEOs who actually was with the President Trump, that is, on the idea that we could get to 3% or 4%, and that you could unleash.
I don't know. One of the few CEOs that
there were. I would say most economists and many CEOs would have told you.
Whatever.
Okay, we can debate where you think everybody was.
That's a false
at that time. But the question is,
a lot of people like the tax reform and the deregulation.
Yeah.
I'm not dissuading you of that view.
Yeah, maybe economists, but CEO. Anyway.
But the question is, now that we're back to the question is, now that we're back to 2.5%, how do you think about that view a year ago?
If you make a list, I mean, sometimes we look at ourselves, like what can we do better as a nation? Not just yelling and screaming about other people and not being afraid about geopolitics or that. But what can we do? We don't get infrastructure done right. The tax reform is critical to have a cumulative buildup of capital in the United States and reinvested here. We don't get our kids apprenticeships to get them jobs. Our healthcare system costs too much. It's a great healthcare system, best in the world, 18.5% of GDP. Okay, we don't give our felons jobs. If we looked at our own issues and fixed them, we'd be growing at 3%. And to me, and reform was part of that. Regulatory reform, tax reform, small business formation was lower than it's ever been in a major American recovery, mostly because of regulations and lack of access to capital. And so to me, I always look at something, what can you do better yourself? Like analyze it. But the thing that we have to do is facts, analysis, detail, not just slogans. And then policy that's well done and explained to the American public as opposed to slogans and policy that's implemented that doesn't work. I mean, you made a list of the policies that we've done in America for the last 50 years that were complete and utter failures, and they're still there. I mean, we should acknowledge it and fix it. And you have a.
What's at the top of the list?
Well, I would put on the next round is immigration reform is hurting this country dramatically, including merit-based, more merit-based. State and local. They're not federal. So if you travel with me one day and visit a bunch of small businesses and ask them what they have to go through to open a small business, how many licenses they have to get, how many times they get audited by the city, the state, or the federal government, for a store with 10 people working in it. So it's us. We did this to ourselves.
Jamie, is there anything to the notion that we're trying to come out of the extraordinary measures after the financial crisis? We make it back to 2 and change. and things start slowing, is there anything to the notion that we've built up so much debt that the slightest increase in rates causes the debt service to go up to where it's unsustainable, and you start choking off at much lower levels, choking off.
No, but this is, even Seth Klarman thinks that we're going to get to that.
Yeah, so Seth made a list of a lot of the things and the geopolitical stuff that's kind of mounting serious issues. The fiscal issue is a real issue, and it's really got to be dealt with. It's not an immediate issue. So our debt to GDP is like 80%, on its way to 100, on its way to 120. We can afford all that, but it becomes a hockey stick in about 15 years. And it's all related to entitlements. So smart people would say, my God, we've got an issue. Let's get together and figure out how to give medical to our people and do it much more efficiently than the system we have in place. But it's not the reason you're going to have a recession tomorrow.
But is the reason that we're now at what may be neutral, what seems like a historically very low interest rate level, is that because inflation is going to be permanently lower because of innovation? Or is it because we can't afford to go up any higher because it just gets prohibitively expensive?
I don't think it's really either of those.
Both?
I think it's a little bit of both of those. And our own, like I said, all these other things that affected growth. Innovation in America is unbelievable. It's just, look at the things I said that are hurting productivity. Infrastructure hurts productivity. Immigration hurts productivity. Excessive health care costs hurts productivity. Not having kids have jobs hurts productivity. Like, take kids. We've got half the kids in inner city high schools don't graduate. And it's a crisis. And I don't see people saying we have a national emergency. And then all the people involved should get together and say, let's do something about it. And I don't care whether you're a Democrat or Republican, a teacher, a union member, or a parent. It is a national emergency, and we're relegating generations of kids to poverty. Is that what our
just barely a Democrat? What are you now? Yeah, a couple years ago.
I don't relate. I don't relate.
You've been
I don't relate really well to either.
You've been on the record. You said just barely a Democrat at one point. Have you revised that, or
no? My heart is Democratic, but my brain is kind of Republican.
You hear that, Andrew?
I heard it. I say country over party. As I say, country over party.
That's what you're saying. I don't know how that applies to you at all.
I'm going to stick with that for now.
All right.
China, how does that play in this whole conversation? And where do you think that nets out?
It is the most important relationship geopolitically in the world for the next 100 years. The administration has raised very serious trade issues, and they are right. Both sides want to resolve it. And you see every time it looks like we might resolve it, things get better. It looks like we won't resolve it, things get worse. If you have tariffs, if you have tariffs getting in place on March 1st, I think that would be bad for the global economy.
But when you say resolve it, there's the possibility of resolving this micro issue. But if you talk to people like Ray Dalio or others, they talk about the idea that we've gone from cooperation to competition to maybe something even worse, and that's a much longer term battle.
I don't agree with that. I mean, China has serious issues. Like, the American public doesn't recognize their neighbors are North Korea, South Korea, Japan, Vietnam, Indonesia, Pakistan, Afghanistan, India, and Russia. They don't have a food war and energy. They don't have our innovation. They don't have our institutions. I'm not insulting them. I'm simply saying don't blow it out of proportion. But I think what you need to do is get the strategic relationship mostly around trade right and fair. And not just for us, but for the Europeans, for the Japanese. And I think both parties want to do that. And that would be better for the world growth. But again, I don't want to overemphasize it. A lot of America's problems are our own doing. Okay, I don't think you should look at the Chinese menace over there and think that's why we have some of our problems. It's not.
Although, Jamie,
maybe a narrow amount.
You're talking about getting an agreement and reaching something before March when the tariffs are going to expand or anything goes along that way. Then you talk about the details where you say you really need to get into intellectual property and all kinds of other issues that are longer term. What's more important, to have something done by the beginning of March or have something that addresses all those other topics?
Okay, I'm going to tell you what I think is going to happen.
Yeah.
I think they'll get enough done, kind of agreements in principle, before the end of March to extend the deadline. I think it's very hard to get something done by March because of the complexity. But if you read the papers and read between the lines, they will allow more foreign companies to buy control of their companies there. That solves two problems: unfair investment and some of the forced intellectual property transfer, because that's what people meant. I can do business there, but I own 49%. I got to put my technology in. Have a form, IP is being stolen, a very quick form to stop that. The Chinese have been talking about reducing their tariffs unilaterally. And then this whole thing about China 2025, that you got to split into little component pieces. Okay, it shouldn't be. They have the right to have industrial policy to grow their country and benefit their people, just like we should have better industrial policy. But what they don't have the right to do is to use state-owned enterprises, theft, subsidies, forced transfers, all these things to dominate industries against other countries around the world. So look, I think the Chinese, I think they're quite bright. I think they see that, if you walk around here, the Japanese, the Europeans, the Mexicans, they all feel that this needs to be fixed. And it's not against Japan, China. It's just let's clean up the global trading system.
So do you think that the Davos zeitgeist from last year, as positive as it was it really as positive as we thought back then? And this year, as tempered as everyone's enthusiasm is it really as tempered? Are we that different?
The great contraindicator.
I mean, are we that?
You guys know what I think of the common knowledge. Okay, I would always bet against it.
But was it?
If I going bet for or against?
Probably about the same last year as it is this year. But we think it's like this.
Joe,
probably maybe like this.
Markets, it's sentiment, the narrative, the echo chambers. And that does affect. And then it obviously affects markets, and maybe it's groupthink. And so 3.5% global growth. The United States is doing fine. Trade may get resolved, and all those things may reverse. I mean, we're going to have a recession one day. We're adults. We should all understand that. And we don't know exactly what's going to cause the next one or exactly what the timetable is, but the financial system's in far better shape in the United States. I think there are some issues around the world.
But as a risk manager, and you're one of the best, obviously, we go back to the financial crisis, obviously. Is there anything that you see icebergs? You feel like you're in a Titanic? Is there anything?
I'd say lots of little things. Like, Brexit, if that goes south, that's not good. If trade goes south, that's not good. If the shutdown goes on for longer, that's not good. They have real direct effects in the economy and then indirect confidence. So you have seen, confidence come down a little bit. So if I was a policymaker, I'd want to get these things resolved. Have good policy, but maximize.
Those are the risks to the downside. What's the upside surprise?
Well, the China gets done.
But you think that's almost built in, though? I mean, I think the groupthink is there's an expectation come March 1st something will happen.
I think that's probably true, but again, I always look at the range of possibilities. I hate guessing about one because you don't really know. So, my guess is the data of the United States ex the shutdown would be rather good coming forward. It could be. Everyone's going to take a deep breath after that and say, "Well, God."
If we're here next year, going, God, what's going to happen with this China problem? And it's not going to be totally fixed because this is a multi-year thing. But I still would bet next year that we're not every other third word is China or government shutdown next year, a year from now, right?
I would hope so.
We'll be on to something else.
Jamie, can I ask you really quickly? You've brought up healthcare costs several times. Obviously, you're working with Amazon and Berkshire Hathaway to try and come to some result with that. It sounds like you're pretty hands-on with some of these things. How soon might we see some sort of announcement about what you've come up with?
We're just hiring a great team and looking at how we should attack this problem. It's a long-term view. We don't expect any announcement anytime soon. And, we will share if we come up with anything good, but we're going to start small, test a bunch of different things. But what we really need now is a great team. And, I mentioned the healthcare, we have the best in the world, like doctors, hospitals, pharma, you name it. But we also have some of the worst outcomes. Obesity, we've got wellness programs that could work better, the opioid problem, 40 million uninsured. So, to me, you look at the whole issue, and then what should we do about it? And for the American public, the rest of the developing world spends 9% in medical. Now, remember, you get better medical here, but 9% is a lot less. And if you look at it as a competitive issue over the future, that is a huge impediment for American business over the next 50 years.
You want to do it or you want me to do it?
Which one?
Did you take any satisfaction when Bitcoin dropped 80% or no?
Nope.
You didn't take it?
Listen, you guys, I've told you before, when AOL went up and came down, it was
You guys.
You all put it on.
Don't look at me.
You actually put it on CNBC every day for a year. Bitcoin.
I just said
you should stop doing that.
Not on our show.
No,
you should stop doing.
Well, what do you feel the same way? What did you weren't Charlie Munger? You didn't Mungerize it.
We didn't have the button on the bottom of the bug on the bottom.
Yeah, we're like,
no, but we did that interview, delivering alpha, right? And
yes.
that was the day he said it was a fraud. And well,
but you didn't use an expletive.
Yeah.
I like expletive.
I didn't want to be the spokesperson against it. But we're using blockchain. That's completely different. It's technology. But even that, we've been talking about now for year after year after year for 7 years, and no one's really effectively done something.
I could ask you that or about pot. So I mean, I think Bitcoin's better than marijuana, isn't it, Jamie?
It is, but we're not banking pot either.
We'll all hang out at the blockchain. There's a blockchain lounge here this year.
Yeah.
Up on the
What are we going to be drinking?
Blockchain is probably a real technology with data. It's really just a database that we can all access and we all trust it. And it's kept up to date. And it may be usable for certain things and not for others. It does cost money to maintain, to process a transaction. So it's like for equity trades, If it costs 2 cents to process a blockchain and an equity trade costs you a penny, you aren't going to use it for that. So,
Here, the new buzzword is protocol, which is the internet of blockchain, which is an
well, that's the other thing. For a blockchain use case, you have to write the code. We have to agree on protocols. Right? It's a lot of work to do something, but we're doing a bunch of stuff now that's interesting. And once you start, you can expand it. Yeah.
All right. It's always a highlight, Jamie, and we make these little things called chirons, and we have a really easy one. My heart's a Democrat, my brain says Republican, and I'm gonna bring that up for you a lot
for the rest of your life.
Thank you, Jamie Dimon.
Thank you,
JP Morgan Chase CEO.
Enjoy it.
Coming up when we return, the CEO behind what could be the hottest IPO of the year if the government doesn't shut down and they're allowed to do it. The CEO of Uber, Dara Khosrowshahi, is going to join us at 8:40 Eastern Time this morning. Stay tuned for that big interview just ahead from Davos right here on CNBC.
Up the battle for affordable health care in the United States, Kaiser Permanente CEO Bernard Tyson joins us right after the break to talk about mental health, drug pricing, as well as industry disruptors. Stay tuned. You're watching Squawk Box on CNBC.